I just started to create this strategy of like the people I want to invest with are medium to small operators because I can trust the person I'm investing with. I can meet them, I can interact with them. I do prefer to invest with smaller GPs, smaller operators, because I feel like those are people that I can get familiar with and create a relationship with that person. And then get that feeling where, all right, this person is legit, he's not going to screw me over. You need to make that decision that you want to go down this passive route. And if you do, you need to find those strategies and ways to do that because it's just worth it. Yeah, I've also made mistakes, and we're devoting a lot of our time now to trying to educate LP investors how not to make the mistakes we made.
Hi there, everybody. Welcome to a special episode of the Fundication Show. I'm Julie Tallman, and I'm with the host, Christian Sadler.
Hey, everybody.
And we would like to welcome Litan Yahav. He's the co-founder and CEO of Vyzer. We're going to talk a lot about passive investing today and the services they offer for LP passive investors. So let's get started.
Litan, it's so great to have you here, and you have such a unique story, and I'd really like to start there. I mean, you kind of have that ideal scenario where you built a successful company and was able to exit and then got into true passive investing, which I think is something that we'll definitely want to hit on during this because many people have different versions of what they call passive investing. But if you could just share with us a little bit about your story.
For sure. So first of all, thanks you guys for having me on the show. I'm excited to be here and talk with you both. So backstory. So I'm a tech founder, founded a company in a crazy industry that we had no knowledge about, and we managed to be successful in that. So we created technology for photographing and displaying diamonds in 3D, and then trading those diamonds online with our tech and scale that to be a global operation, processing about 7,000 diamonds a day with a 250 headcount operation, and exited that company. We sold it in 2015, had a 3-year earnout, and then me and one of my co-founders decided to move on in 2018. And basically, since the initial exit in 2015, me and my co-founder have been investing, managing our money on our own. Just to put things into context, the exit itself was good. We didn't make tens of millions, but we made enough. And we're looking for ways to deploy and have that money work for us in a passive way. And we can dive into that because very fast we understood that what we thought was passive wasn't really passive, and found our way into LP investing and enjoy the passiveness and the returns that involve.
Yeah.
Before we talk about passive, I really want to ask you what qualities you and your partner have that helped you be successful, not only in the first business that you created, that you have no idea, you built that and created a new concept, then made you successful in investing, and then also made you successful in this new tech company. That's really rare to go from one to another to a third and kind of knock it out of the park each time. What helped you there?
Sure. First of all, I thought you were going to ask about the quality of diamonds, so I'm glad you didn't ask about that.
That's a different subject.
Yeah. I think but I think your question is super important because I think the number one failure for startups is co-founders who don't get along. And, it might be nice at the beginning, but then as you start to work and grind and things get really hard, that's when you're measured. That's when true partnerships come to the test. And so me and my co-founder, so we were 3 co-founders in our last company, and our third co-founder, our CTO, great guy, but we found him after we already started sort of ideating that idea for the diamond business and convinced him to join us. And with the 3 of us, we're building this company. And I think the qualities the 3 of us had were that we all respected each other a lot. We all understood each other's sort of strengths and weaknesses. And there was like no ego involved. And I think it's super important. And so that was like from the get-go. And then building on that, after we exited the company, I left with the original co-founder, Tomer. And Tomer and I, and this will sound weird for like tech founders, Tomer and I do not necessarily complete each other from a skill set perspective. So it's not like I'm the CEO and he's the CTO. It's not like I'm the business guy and he's the technological guy. I mean, that's not the situation with us. Both of us served in the military for 6 years. Both of us are very business operations type of guys. And the main reason I think we really work well together is because Um, the I'm more, I'd say, external facing, and he's more internal facing. So, I like getting on podcasts and talking, and he doesn't. Um, I'm fine with sort of like, preparing, put together decks, and he doesn't really like that. Um, you know, I'm fine being in front of a camera, not even on a podcast, and he doesn't really like it. So it's like, but I think the fundamental of it is we're really, both of us are really hard workers. Um, and we don't step on each other's feet, even though 30,000 feet, we're basically on the same square, but we know how to give each other space. And again, I mean, the fact that we proved to ourselves that we can work together in our first company gave us that ability to really work well in our second company, because we do complete each other across the board on different aspects of it. Like he's really operation oriented, like to the details. I'm more like the marketing side of it. But there's like a lot of like overlap, but also some completing stuff. I hope that answers your question, Julie.
Yeah, and it kind of sparks, a question on my end, because you guys had that exit together and started investing, and it sounds like a lot of that you guys were doing together. So were you guys, kind of sitting together and analyzing different opportunities? Did you buy some properties together in the beginning, and that's where you realized that it was not very passive and you wanted to move more passive? Like maybe dive into that story a little more.
Yeah, so we both made the same amount of money, and we both were in the same position in life. Like our wives are friends, our kids are the same ages. And so it just made sense for us also. All right, let's think what we can do with our money together and then create a synergy and diversification. We can buy, one property 50-50 or two properties and then split it 50-50 between us. And that way we have diversification, lower the risk, and also learn together as we start growing and deploying this capital. And so, yeah, we've been investing basically together. We founded an LLC in the US that we funded and then invested through that as well. I mean, again, because we already have that trust under our belt, and we know that we know each other and probably know everything about each other that most people don't know about their wives, maybe. Like he's like my second wife or first one, depending who you ask. And so like, we do invest a lot there. I mean, there have been deals that I did on my own, and there have been deals that he's done on his own. But I'd say 99% of them we've done together. And so we'll meet with people together. We'll go over the deal together, or the startup together, or crypto, whatever it is, and we'll do it. We'll think about it together.
Got it. And what were some of those challenges that you guys ran into? I mean, this is kind of probably getting into the Vyzer story, but in the early stages, what were the things that you were running into? Because I see a lot of folks that they end up with a high, earning position, or they have an exit. They know they want to be in real estate, for example, and then they go buy a fix and flip, or they, buy a property that's a short-term rental, and they start realizing that they just put themselves into another job, and sometimes that job, quite frankly, doesn't really pay as well as their other business that they're running, or at least is not as exciting to them because they have a particular passion. And so I'm curious, what are some of those early day challenges that you guys dealt with, and how did that evolve into where you guys are now?
I think it's an important question. I think something we found out pretty early on is that real estate investing is a whole spectrum of asset class and categories that is extremely broad, and the levels of passiveness in each of those definitions that are considered real estate investing is like an extreme, right? Like you mentioned, if it's a fix and flip, that's like probably the most active investing you can do in real estate. And I'm going to go to the total other side of the spectrum. Many people won't consider this real estate investing. I do. I just think it's a different level, and that's buying a publicly traded REIT. It's also a type of real estate investing. Like there are people that will consider that a part of their real estate and their asset allocation in their portfolio. And so across that spectrum of like a flipper and a publicly traded REIT, there's a whole mix of different opportunities that we learn. Now, we didn't go like, we knew we're not going to be flippers, but we did think that let's just buy a few long-term rental properties, like single family homes. And we bought two of these, and it was a mess. It's like we had a property manager, like a reputable property management firm, but it was still a lot of work. Like we get phone calls and emails, and a municipality driving us crazy, and renters that were ruining our properties. And it was just a mess. And at the same time, while we had these two properties, we also deployed some capital into like real estate syndications as limited partners. And it was like we were making better returns, doing, I'd say 20% of the effort, and it was just, it didn't make any sense. And so that's sort of like that tipping point for us where we decided we're not doing this anymore. It took us 4 years to get rid of those two properties, but we've only deployed mainly deployed capital into LP positions. We did a few direct deals, not long-term rentals per se, but like in Europe, we did some investments as well that were more similar to those first properties, but through someone who like took care end to end of everything. And so it's sort of different. But still, I think the best passive slash risk slash reward we've seen on the LP investing.
Yeah. Yeah. And I was one of those guys for a long time that was out there promoting, buying rental properties as a passive income stream. And, it's not truly passive. It's a level of passive. And, depending on how many systems you have in place, anything can move, more to the passive direction. But if you are the owner and the operator, everything still kind of falls to you. And so there's the decisions that need to be made. There's the challenges that need to be handled. And you can never have enough layers in place to handle every challenge without potentially giving up majority of your return. And so, LP investing, the last couple of years that I've been involved in building this marketplace, it keeps raising up in my status, so to speak, as the best passive way of investing your money.
I just want to clarify something on that point. I think when you think of it from a perspective of passiveness, in addition to risk, reward, and those three, or even the passiveness versus the return, is a really important equation. So for example, if I'm adding 2 times the work, I want to see at least 2 times the return, right? A long-term rental, a flip, for example, is like 10x the work, I think, from an hour perspective. It could be 10x the return of an LP deal. It's harder to find, but I'm not saying it's wrong to do active real estate. I'm just saying you need to think of it from a passiveness perspective in addition to the risk return perspective. And that's something that we really understood early on. So like, again, that's why I want to do LP investing. That's why I also invest as an LP in small operators. And I've also done LP in development deals where the returns are higher than just like value add multifamily deals, as long as I have that passiveness level that is the same.
So I think we're all on the same level playing field here, that passive investing is so much more enjoyable, so much more simple. But then you have the complication of different investor portals, different logins, different quarterly reports, different. So I think that's when Vyzer was born, right? Like, how do we keep track of all of this information? Can we kind of move into your challenges in the beginning and how Vyzer was born?
Right. So we started to deploy capital into a lot of these LP deals and with different operators, different GPs. And we had these good problems to have where I'd get an email from a GP and I'd be like, holy crap, who's this person? When did I invest with them? And, cash coming in and out of bank accounts and documents and K1s and tax. It just became a mess, a good mess. Again, I can't complain. I need to, emphasize that. But still a mess. And again, I'm in the mindset, I want to be a passive investor. Once this becomes, overwhelming from the amount of communication and cash going in and out and things I need to deal with, oh crap, again, I'm back to that level of like, oh, I'm active again. And so we ended up building a platform for us. And again, perspective-wise, we didn't make tens of millions in our exit, but we made enough to reach that type of complexity and good problem. But if you don't make like 50 or 100 million, like you're not going to have a family office or a team to take care of this stuff for you. Usually traditional financial advisors won't really help you do all that. And if they do, they'll charge you $50,000, $100,000 a year, just a lot of money. And so, and not necessarily give you all the value you want on that specific, field of private investing. And so we ended up building a software for us. We hired an engineer and we built a software to track and manage all of our stuff. So those emails I got from a GP, they'd go into the software and it analyze that and then update everything for me. The bank accounts where I get those cash flow from, it's integrated into the software, and it automatically tracks performance, and the investor portals and just all this stuff that we'd have to do manually. We built just automations for that. And then a bunch of people wanted it as well, like friends of ours and other investors, and we're like, wait, there might be a whole opportunity here, and we turned it into a new startup, which is Vyzer. And obviously, it's iterated a lot from a product standpoint, a business standpoint, but that's like the fundamental of why and how we built it.
Did we meet you at the Best Ever conference?
We did.
We did. So I was speaking to a woman there, and she said, I'm here because my husband just passed. And not only did I not even have his password, but I had to wrap my arms around all of these investments and how they work. And it's like, if he had had Vyzer, would have been so much easier. So I think especially for realizing that these investments don't just go away overnight, it might be something, so many of us are doing this type of thing for our upcoming generations, for our kids. So what a beautiful thing to pass on and say, here's the keys to the kingdom.
Right. We've also added a few months ago, because we had requests from clients, we've added the whole ability to invite family members into Vyzer so that they can have access, different permissions type. But like,
Nice.
That's also one of the things, to bring in your spouse, your kids. There's a lot of more aspects we can talk about, but I don't know how interesting it is here to dive into technicalities. But yeah, that's sort of like, I totally agree. Listen, I've had conversations with people with crazy stories about how they track their stuff, to the extent, I have a friend, and I asked him, how does your wife know where everything's at? And he's like, well, whenever she asks, I put sticky notes on the refrigerator with all of our holdings. Like, what? Seriously? Like, you're with $20 million, that's what you do? So it's pretty crazy.
Yeah, that's a little terrifying for sure.
Yeah.
What about, is there a way within your system, or how do you recommend people leverage data from past investments in order to make future investments? Is that covered at all within Vyzer?
So and this is a buzzword, this might sound like a buzzword, but this is like for real. We are a data-driven company, and we take it to the extreme. So, for example, we anonymize all of our data, and then present anonymized data to all of our clients and users. So, for example, you can see how people like you are investing, how they allocate their investments from an asset allocation perspective, but all the way down to the fund level. So you can see which platforms, funds in each asset class other people are investing in, how much has been invested into those funds, and how many investments have been made. And, we're going to show the performance versus plan of all those funds. And if one of those, like the communication standards of those funds, if we're talking about real estate syndication that have distributions, like which of these have stopped distributions, had unexpected capital calls. Like, there's so much important information to share in the private markets. In addition to other stuff, like, all right, you have a crypto portfolio, like where's everyone putting their, like, which brokerage are they using? Which bank account is giving the best APY on savings? Like, there's so much information that is opaque and people don't know, and it's really hard to retrieve it. And usually there are these gatekeepers that hold it very close and won't share, because that's how they make money. So yeah, 100%. I think data is extremely important part of it, especially in the world of AI. So we're also building a lot of models and LLMs on top of our data to provide more insights and input on users, and on clients' information, performance, projections, history, document analysis, investor portal stuff. So there's a lot of data focused functionality.
Litan, who's your customer profile? I mean, if you kind of boiled it down and tried to average it out, at what point does somebody come to you and say, I need the Vyzer services?
Yeah, that's a great question. I think when we kicked this off, we thought that our target customer was someone with $1 to $20 million in investable assets. But then when we launched this like 18 months ago, we have clients now with hundreds of millions, and we have clients with hundreds of thousands. And so it's not a matter of net worth or investable assets per se. It's more a matter of complexity. And so once you have 5, 10 private investments, and these private investments usually have, documents flowing, investor portals, cash flow, that's when it starts to become a mess. And that's where we become relevant, because the alternative is building a crazy spreadsheet, maintaining a Dropbox or whatever, a Google Drive. Some people even have, a personal assistant doing it for them and maintaining all that, going over emails, reconciling transactions in banks. That's when it becomes necessary to have a platform like ours. And because of the data that we have and the insights into the private markets and the public ones, now people are starting to come and not even track their complex wealth, but just learn how, where to invest. And we've been doing a lot of like educational content and things to help people that aren't at that complexity yet to reach that complexity. And then it's a win-win, right? If we can help you like generate more wealth, and then you reach that level of complexity, then it's a win-win, right? And so that's also things that we're working on.
Yeah, and then do you have different levels? I mean, are you working with somebody that is an individual investor versus like a fund of funds, for example, that may be much more complex and investing their money in offerings that have multiple offerings?
Christian, you just opened a Pandora's box with the definition of a fund of funds, but we can dive into that maybe in a separate episode. But if what you mean is like individual investors versus multifamily offices or RIAs, then our focus is on individuals and single family office, although we do have multifamily offices and RIAs also reaching out to us and interested in using our platform as well. Just a point on that fund of funds. So the fund of funds, the feeder funds, the GP, basically those are all like the GPs that, they have their own products. They have their platforms as well. Those are those investor portals. We are not trying to become an investor portal for the GP. As an LP, by the way, who has probably 15 different investor portals, I do not want to log into all of them. I just want one place. And so usually the people that need that are these like, more individual, single family, maybe multifamily investors who have that type of allocation.
Well, I'm asking it a little bit from a personal perspective. As you know, we do have a fund, and as I'm thinking through this and the capability of what you're building, we are very early stage. We're just opening up to outside investment, and I mean, I think that the tools and the data could be useful for us because we're buying secondaries. So now we're going to have positions in all of these different syndications, and then people are then going to be investing into our fund to have that diversity and hopefully the higher returns that come with the late stage investing from what we're doing. So a little bit of a greedy question because I'm curious if this could also serve our needs.
Yeah, 100%. As long as sort of it's treated as the platform for the LP to log in and track their investments with you as well. And for you also to use it to understand like where the LP itself is invested in, all the document flow and all that type of stuff. And to your point, and what you guys have built, I think is super interesting because the whole world of secondary markets for passive investors, LPs like us, there's obviously the question of liquidity that comes up. And I think that, and we spoke about this, and I'm happy to mention it here as well, because I think that when we set off with Vyzer, we did think about, all right, if we already have all this data, why don't we also give our clients a secondary market option? And then when we started to build the fundamentals of what we're building, so what we're building is a whole product. Adding that as a functionality, a secondary market, that's a whole nother ballgame. We're just going to partner with someone to do that. And so I think it's super interesting what you guys are doing because I think it really gives that type of value proposition to those passive investors, people like me, who have illiquid investments in these private markets, and the ability to then liquidate them, sell them to other investors or to funds is super interesting and I think super needed in this market. So yeah, definitely think that's something that will be done.
Yeah, and I mean, there's so much synergy because in the same realm when we talked about this, and I really appreciated your advice because as we were building a secondary marketplace, we were thinking, okay, within our platform, we would love for a way for people to track all of their different investments so they would know which are performing better and which ones they might want to liquidate. And you gave the wise advice of, I mean, that's a whole nother beast in and of itself. And to build that on top of the company that we're already building would be very difficult and probably, take away from our ability to serve our core clients the best that we can. So I think that being able to collaborate with somebody who's a specialist like you in creating this software for tracking and managing and understanding the data, there's a lot of benefit there.
Yeah, I think, as you know, in a software company, the biggest challenge is deciding what to focus on, because there's so many things on the roadmap that you can deal with, and deciding which is the most urgent, important one is a huge, difficult decision to make. And so, yeah, I'm glad I helped a bit. I hope it's the right decision. I think it is. And I just see what we're dealing with in building this platform, and just like the functionality is endless. Only to bring that value of, one source of truth, automation, is just so hard.
Yeah.
But we see the value we bring to our clients, and it's just like it's one of the things that pushes us forward. You're on the right spot. You're building something people need. It's just a matter of perfecting it.
Yeah, totally agree. And we didn't realize we were in the tech business until we were in the technology business. So that was another challenge that we ran into, of just trying to buy an off-the-shelf service to to host our platform, and then bringing in the different subcomponents, and ultimately having to refocus and build and rebuild our entire tech platform. I could see where, as we've been doing that, it's so easy to go off and try to add everything. And in so doing, you could spend your entire career building a software that never launches. And so, we're definitely doing better at narrowing things down and at least getting to the point where we have the functional product before we add any other components, so to speak.
Yeah. Yeah.
So Litan, what's some of the biggest challenges you see passive investors running into in today's market?
I think there's always been an issue. So let's sort of like take a step back for a second. I think passive investing in real estate funds and syndications, whatever it is an LP, is passive once you deploy the capital. Once you find that winning horse, that GP, that is or you assume, or you're willing to risk, or you think that they know what they're doing, that they're not going to screw you over, or at least with very high or low probability that's going to happen. So the effort goes into finding those types of firms, of people. I think that's the biggest effort. And so, and that's the active part. And that's not, by the way, why many people don't go into this investing world, is because they just don't want to spend the time vetting that and looking for things, and they're just going to go invest in the public markets because that's easy, because you can do it with a click of a button. And there's not a lot of research required. If there is, it doesn't really matter. And so I think in this, and I started doing this 9 years ago when money was cheap, and when everyone who just like threw a dollar at real estate made money, basically. And now you're seeing over the past year and a half, and I also think in next year and a half, you're going to see a lot of this crumbling down. But there will still be, as there always have been, really good GPs, really good operators in the market. And so I think the biggest challenge now is, doubling down on finding those. And the catch-22 is, if there are good GPs, good operators, that usually means they don't have a lot of deal flow, because they're patient and they're waiting for good deals to come to the table, and not forcing deals through the funnel as a lot of bad operators are doing, right? I'm not saying that every operator that sends a deal every week is bad. I'm just saying it raises a question mark for me when I get a deal sent to me every other week, every month. And especially in this market, it just raises question marks. Again, not saying it's bad, not saying it's not good for this. These are bad operators. I'm just saying it raises a red flag for me. And there's some other red flags that we can talk about, but I think that that's still the biggest challenge, is finding those good operators that know what they're doing, that have the experience, or even if they're new, and it's fine to invest with new ones. I think they're taking all the precautions necessary. The terms make sense. The risk return makes sense, right? Because obviously a newer operator, especially in this market, is higher risk than an experienced operator. That should be reflected in the terms you have with that operator, and from a waterfall perspective, fees, preps, all that stuff. But that's a whole conversation in itself.
Yeah, I mean, when it really comes down to it, again, we're not saying that one type of investing is better than another. And there's many people that they'll never become an LP investor just from that trust aspect. They trust themselves to make the decisions. They want to be the operator. They want to, be hands-on. And quite frankly, I think we need those folks in the market, and especially the ones who get really passionate about a specific aspect of real estate and they become good GPs. Without them, we don't have the passive LP investments, and so it's not about better or worse. It's really about preference. And as you said, if you are going to be a passive investor, there's got to be a level of active throughout that. And if you get a substantial amount of wealth, you might spend your entire working hours, so to speak, looking at PPMs and evaluating sponsors and doing some of those things. So you have to decide, is that something that you're passionate about? And again, it's just this level of passive within your portfolio. You mentioned a lot about finding out those people that you trust that can deliver returns, that are not going to rip you off, that have some experience. What are some of those aspects that you look for in a GP when you decide to make an investment?
That's the biggest question. That's $1 billion question there. I think so when I started investing, I only invested with people like friends of mine or friends of friends, because that created this initial level of trust that I know these people will not lie to me, will not cheat me, or there's a very low probability, as I mentioned, that they would. But there's a limit to those people, and you don't, how many friends you have to do that, and so you have to expand and find other people that you can learn from their experience investing in this world. And so I joined a lot of these investor communities and clubs so that I can meet and interact with people that are on both sides of the equation, the LPs and the GPs, educate myself, and over time, I've found things that work for me. And to your point, that's like really important. It's like my strategy could be very different from other people's strategy, but you need to make that decision that you want to go down this passive route. And if you do, you need to set initially you have to find those strategies and ways to do that, because it's just worth it. And I think to your point about there will be LPs that passive investors that become GPs, they're probably not passive investors if that's who they are, right? I mean, and it's important to clarify, but I do think that that when hold on, I'm gonna pause for a second. We'll edit this out, right?
Yep.
I just want to hear it again.
There you go. Everybody cover their camera and they'll know to edit that part.
Now we lost you. I forgot what I was saying though. What were we talking about? I lost my thread.
Talking about how you evaluate sponsors and how the way that you do it is going to be different than somebody else, because everybody has their own preferences. And
right. Okay. Yeah.
you mentioned that you were in the beginning, going with friends and friends of friends, and how you've got to stretch beyond that.
Right. Okay. So after I exhausted the friends I have who invest in this world, I basically joined these communities and then found that I do prefer to invest with smaller GPs, smaller operators, because I feel like those are people that I can get familiar with the GP and create a relationship with that person, and then get that feeling where, all right, this person is legit. He's not going to screw me over. Now it's a matter of their experience in this world and the terms of the deal. So then for me, it then became, all right, let's talk about terms of the deal. If I'm investing in a multifamily value add, at least up until 2 years ago, if they're not looking at 14 to 18% IRR, but they're doing stuff that are lower than that, and this is like a smaller GP, then that's something I do not want to invest in. Or if this is a development deal, a ground up development deal, where the risk is higher, the return should be higher, and so if they're doing that at like a 15 to 17% IRR, then I won't do that deal because it doesn't reflect the risk that's involved in it. And so I just started to create this strategy of like the people I want to invest with are medium to small operators, because I can trust the person I'm investing with. I can meet them, I can interact with them. Second, it's deal terms that make sense to me. Same goes, like I mentioned earlier, about the waterfalls and the fees and prefs. Another aspect of that, I think, and I've spoken with large operators about this as well, there's other advantages for me to invest with those smaller operators is because usually the smaller deals have more meat on the bone, and the larger operators won't go after like a Blackstone will not go and buy a $10 million multifamily deal because it doesn't make any sense for them. It doesn't fit their strategy. But that $10 million multifamily deal might have huge value add potential, and that's going to be left for those medium to small operators. And so that's sort of, and we can, again, there's a lot of stuff that those are like a few points. And yeah, I've also made mistakes, and we're devoting a lot of our time now to trying to educate LP investors how not to make the mistakes we made.
With your data, Litan, are you able to see when people start to invest, do they invest a small amount with a syndicator until there's trust built, and then you see bigger amounts being invested? Or do people generally kind of say, I'm going to place all my eggs, I did all my due diligence, I'm going to place all my eggs here? Are you able to see patterns in that?
Yeah, I'd say 100%. People put a small check at the beginning, and then they'll double down when things start to appear well. And so they might write multiple small checks to multiple operators at the beginning when they're getting into it. And then the overperforming ones, or the ones that communicate really well, or the ones that they're just like really happy with, and it also makes a lot of sense, right? To do that. And so, yeah, we do see that 100%.
Yeah, it does. And we even know a very large operator that he constantly places small checks with other operators because he wants to learn from what they're doing and what's working well. And so he'll continue to place, $50,000 to $100,000 investments with smaller operators or operators that are in similar fields as him, because he gets the data from doing so.
I think GPs are probably I think most LPs are probably also GPs themselves. And I think exactly to your point, they want to learn, but they also want to diversify. So I don't think a GP should put all their money, in the same basket, which is with them. I do think it's smart for them to diversify. And I've heard of like GPs that have, hundreds of LP investments with other GPs. Mm-hmm. So 100%.
That's the beauty of Vyzer, because I know for myself, I think I would tend to say, let's just keep this to maybe 5 GPs, because I don't want the headache of all the, like you said, the K1s, or, extending all the time I'm going to have to do to wrangle that. And so having that all together is such a beautiful thing, so that you can go, I'm going to do 50,000 here, 50, and really widen your portfolio to see what works and with whom.
Sorry, just to that point, I've heard about a lot of investment. It's crazy. I was like mind blown when I heard this a few years ago. They will not invest with a new operator because they don't want another investor portal to log into.
Yep. I've heard the same thing. I work with people in our listing hub, and they'll want to list a series of shares. And then they think, but I don't even know where to find that information. And it should be simple, it should be straightforward, right? It's like, well, do you have a PPM? Do you have a quarterly report? Do you have the paperwork from the beginning that shows what it's supposed to do? Do you have, and they're like, I can't find it. So for sure, having that all in one place has got to be so attractive to most people out there.
Now, do you guys deal with anything on the tax reporting side? Because this is another challenge. It was actually just brought up to me as I'm talking with investors that are looking to invest in our fund, which our fund is going to be very diversified. It's going to be across asset class, asset type, and most importantly for this gentleman was geography, because from his perspective, he doesn't want to have to file any more state filings. He doesn't want to have the multi-state filing situation that he's dealt with in the past. And he said he opted out of one fund because his friend, who was very new to investing, invested with that operator and then had to file 12 different state filings because of that one investment. And so do you guys do anything that helps on that side of things?
Well, we'll gather all those K1s into one place, but the reporting is still based on what their CPAs or their tax advisors, the structure they have in the holding company, the trust, whatever it is. And depending on that, the tax filing becomes more complex or more easy. But on that front, we just really help with the aggregation of data, especially the documents, in one place. And we'll let you know also like which funds haven't submitted a K1 yet, like with the geography of those funds or those properties or those syndications. And then we'll also give you the ability to invite your CPA or your tax advisor into Vyzer to retrieve all the information they need. So you don't even have to send them anything. They can just come into Vyzer and take it for you and let them do the work, right?
I'm sure
we,
they love that.
yeah.
What do you, does Vyzer have different programs, or is it just kind of one size fits all?
Yeah, so when we launched it a year and a half ago, we had one program, one pricing tier. And then we found that there are people that are bigger and people that are smaller that are using it. It doesn't make sense to have them use the same tier. And so we built out a whole model that we launched last year, which is what we call in software SaaS is a freemium model. So basically you get a free version that you can use up to a few assets and use the full functionality up to those assets. You can even set up your full portfolio at the moment just to like get a feel for the platform. And then we have 3 pricing tiers based on your complexity, how many documents you need just to analyze a month, how many investor portals you need to retrieve information from. If you want to invite people in from a role management perspective or give people permissions, that's a different pricing tier. And so we basically built it to accommodate all different types of investors, from the smaller ones to the bigger ones. And it's still really cheap compared to the alternatives that are basically hiring an assistant, which, is tens of thousands of dollars a year. And, our highest pricing tier is $1,800 a year. So it's still very, very affordable.
Hiring an assistant, but also the accuracy, right? How much time do you have to put into educating somebody to do everything the way it should be done? And I see so much value there. I really think we probably have a few investors that would be very willing to try out.
I'll tell you this: we have clients who have an assistant managing their Vyzer portfolio, and we know the assistant is doing a bad job, and we'd probably do a better job instead of the assistant. And we can just be their assistant; they don't really need that assistant, right? And we've told them that because it's so easy to. I mean, there's so many things that we can automate for them. Like, why do you? And even more so when the assistant isn't accurate or doing a bad job at it. There are really great assistants out there that are doing good jobs, but like there's some that are really not.
Yeah. So I would love to switch topics and talk about the secondary marketplace, because I think that you would have such a unique perspective. I mean, you obviously saw a need for it and considered going down that road. What do you think this will do for the world of real estate syndication when the secondary marketplace becomes much more active and people are participating in it?
So I think when people invest in the private markets, there's always a question mark about liquidity, and as we mentioned before, right? Because the alternative in the public markets is that you can liquidate an asset with a click of a button. And so it only makes sense in this, recent age in the future, of course, to do the same thing for the private markets. And I think that there just wasn't a platform that was capable of doing that, mainly because of data and regulation, but also because I don't think there were enough private investors in the market yet. I think retail private investors have only joined the market over the past probably 10 years. And now there's a critical mass that is in that market, and they have friends that are coming into the market. And then there are questions by those friends: hey, wait, I'm in the public markets, why should I go in the private ones? And one of the reasons not to is because of liquidity. Yeah. Now, I have a whole approach on liquidity, and I think we probably spoke about this as well. I think liquidity is a fiction. I think every asset is liquid. It's only a matter of a discount on this, right? Personally, I think having a stock portfolio and saying it's liquid and then selling it at a 30% drop is just like me having a house and saying I want to sell it within an hour and I'm going to give a 50% discount. I'll sell that house within 30 minutes. Like if there's a market value and I'm selling it under that market value at a substantial discount, it'll sell. And so I think liquidity is something that's important but needs to be understood. I think that it's important to have the ability to be liquid, and it does help making decisions when you invest. But I do think, and I do think that sometimes liquidity is dangerous. In the public market specifically, right? Like people just make bad decisions selling when things drop. Yeah. And so, because again, this is relevant for the publics, because the privates, they don't have that fluctuation in price. So for the private market, when you liquidate an investment, it's more about, all right, usually I probably need the cash, and so I'm going to liquidate, not because the price dropped or anything like that, but more because of a cash flow perspective. Whereas in the public markets, you're going to liquidate because usually you're afraid. And that's like a red, like you don't want to sell a stock when it's dropped because you're afraid. You want to wait until it rebounds and then sell it. So anyway, that's the way I see the world of liquidity. And I think that what you guys are building is super relevant and important in the private markets. And it was just only a matter of time until someone do it because it's a necessity. Again, especially as data becomes more transparent.
Yeah.
I like your take on that. And the data does have to become transparent, because I talk to people all the time and they know it. They know that there's not enough visibility on these types of assets, because their first question, you can guess, is how much do I have to discount? And so if there's more eyeballs on what they have, that goes away and we're able to see those assets for the assets that they really are. So I love the way PREIshare and Vyzer can kind of come together with that data moving forward. So we definitely have to keep talking for sure.
Yeah, and from that perspective, I believe you're right. And I think it was Jeff Bezos that said that the stock market in the short term is a voting stick, and in the long term is a measuring stick. And unfortunately, people get caught up in that voting short term with the public markets. And so with the private market, that perspective, hopefully we can give the liquidity for those people who need it without giving so much liquidity to the point where people make really poor decisions. But like you said, there's also just not the same fluctuation in value. And the only way there would be is if these LP positions started becoming a trading commodity, so to speak, which I don't see happening, at least not in the near future. And, just from the perspective that, the way that our CEO puts it, 7 out of 10 people who knew they wanted to invest with him, who believed that they were going to get better returns investing with him, that believed more in the security of the asset that they were investing with, didn't, simply because they weren't sure what their life was going to look like 3 years or 5 years down the road, and whether they were going to need that money. And hearing that illiquidity aspect of it was a kind of a very scary thing. So if we can at least eliminate that, no liquidity factor, I think a lot more people will move their money into real estate, which again, I believe in many cases is a superior asset.
Yeah, and I think when you look at the secondary markets in the private world, there's, I guess secondary markets are always in the private world, so that was a stupid sentence. But yeah, but secondary markets in the tech world, you see this has been around for years, right? Where you can sell your shares in a startup to investors who want access to that company. And usually the employees who sell those shares are employees that believe in the company, but they need that liquidity because of the cash perspective. And so I think it's more similar to that type of liquidation of shares in the startup world, what you guys are doing, as opposed to public market liquidity. And there it's becoming more and more, a commodity where, there are companies that now help you exercise those shares, and there are VCs that will come and buy you out because they want access to that company. And so I think what you guys are doing is along those lines, because there are people who want access to a specific operator who doesn't have a deal in this market. And there's a deal that's really performing well. And there happens to be someone of the LPs who just needs liquidity because they need to pay off a different deal they're in. So there could be a really great synergy there, an opportunity for a win-win situation where that LP investor gets their cash, at cost value, at a premium, or whatever. And that investor gets access to an operator who they believe in a deal that's performing well. And so at scale, that's the best case scenario. And I think that brings a lot of value to the industry.
Yeah, absolutely. Well, we appreciate the endorsement there and what we're doing. And again, I think it's synergistic. We really are excited about what you're doing to simplify the jobs of the LP and make investing in more transactions more accessible to the LP investors out there. So I think this has been a great conversation, and I hope we have the chance to do this more often.
Yeah, I appreciate it.
Agreed. Thanks so much for your time, Litan. I know it's like time for you to go to bed in Israel.
I'm not, it's only not even 8 o'clock, but yeah.
Okay, well, that's not too bad.
I appreciate it, guys. Thanks for having me on the show. This was fun.
Yeah,
Thank
thanks for
you.
joining us, and everybody that's on with us here, thanks for joining us for another episode.
Bye, everybody.